Cost to build peer-to-peer lending software. Peer-to-peer lending platforms sit at the intersection of lending infrastructure, investment management, regulatory compliance, and payment processing. Unlike simple FinTech applications, P2P systems manage two-sided marketplaces, capital flows, risk models, and sensitive financial data. Because of this complexity, the cost to build P2P lending software depends heavily on architecture depth, regulatory scope, automation level, and transaction volume expectations. In this video, we will break down the realistic cost of building a P2P lending platform in 2026 and what drives that investment. Let us begin with a baseline scenario. For a basic P2P lending platform that includes borrower onboarding, lender registration, KYC integration, loan listing, manual approval workflows, escrow integration, repayment tracking, and reporting dashboards, development typically requires an investment between $120,000 and $250,000. This range assumes integration with third-party payment gateways and credit bureaus, rather than building proprietary infrastructure. As complexity increases, costs rise accordingly. If the platform includes automated credit scoring engines, machine learning risk engines, and alternative data analysis models, data science and engineering costs increase significantly. Risk modeling often requires ongoing model training and monitoring infrastructure. The third factor is payment and escrow management. Secure fund flows, EMI calculations, ledger reconciliation, late fee processing, and penalty logic must be engineered with high precision. Integration with banks and payment APIs adds both development time and testing complexity. Next comes security architecture. Encryption at rest and in transit, multi-factor authentication, role-based access control, API security, fraud detection monitoring, and secure logging systems are essential. For platforms handling large capital volumes, zero trust principles and PCI-aligned practices increase security investment. User interface complexity also affects cost. Two-sided dashboards for borrowers and lenders, real-time portfolio tracking, risk exposure visualization, transaction histories, and performance analytics require thoughtful UX design and back-end analytics systems. Integration depth is another major cost variable. Connections to credit bureaus, payment processors, banking APIs, accounting software, CRM systems, and regulatory databases expand both development and testing requirements. Testing and quality assurance must be rigorous. Financial miscalculations, reconciliation errors, or compliance gaps can create severe legal and reputational consequences. Comprehensive functional testing, performance testing, security validation, and integration testing add to overall cost. Another important consideration is ongoing compliance and maintenance. Annual security audits, regulatory reporting updates, penetration testing, and system scaling require continued investment. Many P2P platforms allocate $40,000 to $100,000 annually for maintenance, monitoring, and compliance upkeep, depending on size. The final cost depends on system complexity, automation level, regulatory environment, transaction volume expectations, and geographic deployment. However, the strategic value must be considered. A well-built peer-to-peer lending platform enables scalable loan origination, diversified investor participation, automated risk control, and improved operational efficiency. At Intellivon, we help intelligent enterprises architect secure, compliant, and scalable P2P lending systems tailored to their business model and growth strategy. If you are planning to build a P2P lending platform and need clarity on investment and architecture planning, we are ready to help. Thanks for watching. See you in the next video.